It doesn't mean that cryptocurrencies never have value ever. It just means that maybe the enthusiasm behind the fundamentals right now are too heavy.
Fundamentals. You're gonna make me laugh over there, Doogles. But
Yeah, because your
to
Excel
use
chart would
his
say
point,
cannot divide by zero.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
How many days a week do you think about Jamiroquai?
0. Proud of that.
Whoa. I was not surprised by the zero, but pride associated with this?
I've moved on to greener pastures.
The man in the hat? The man in the little hat?
Yeah. I think 0.
Wow. Zero. Oh my goodness. I feel like you're not American.
I mean, make your point here so we can actually get into the good stuff of the show, dude.
My point is about Americanism. And Jamiroquai, I can't even at this point. I didn't realize zero and pride would be it. We have to move on.
Yeah, perfect. Let's move on. Thomas, I think it's pronounced Peterfree. Thomas Peterfree. I'm saying that wrong, I'm sure. Is the CEO of Internet Active Brokers.
Oh.
He came out and said that what percentage of volume on his platform is related to trading of Mag 7 stocks. Doogles, tell me.
Magnificent Seven?
Yeah.
When did you start saying Mag 7? Like you were some kind of like a teenager or something like that. You're going to talk about your skibbity-doo riz nonsense?
Yeah, it's all the Jamiroquai I'm listening to. Yeah, go.
Yeah. Oh, by the way, where I was heading to, just so people know, is virtual insanity. But anyway, we never got there because you threw us off with all your Americanness.
Magnificent Seven stocks trading on his platform. What percentage does that take up? Give me a wild guess.
36.
70%. 70% of trading on Interactive Brokers is Magnificent Seven stocks. We live in a casino, Doogles. We live in a casino. People
define trading. Define trading for me.
I don't know. I'm just looking at a quote. It just says, I don't know.
You don't know?
I assume that's buying, selling, and options. 70%.
But there's 7 stocks, regardless of what these stocks are. 7 stocks take up 70%.
Why do you think deep value is not doing anything? Because the 3,000 stock by market capitalization, no one even knows about, let alone buys or sells.
I feel like every time we have a conversation, within 15 seconds, you go, why do you think deep value?
That's right.
No matter what we're talking about.
Keep it going.
Okay.
Quiz number 2 for you. Quiz number 2.
Okay.
I love this stuff. This is correlation, not causation. It's absolutely fascinating. Doogles, if you are the driver of a Ram, I'm really just going to tell you this because it's hard to do as a quiz, but I'll throw in some questions.
Just put some inflection at the end, so it sounds like a question.
You are the driver of a Ram 2,500 pickup, like their midsize pickup. The chance of you getting a DUI is 45 drivers per every 1,000 that drive the thing.
That seems low.
If you drive, it's not the highest by a long shot. If you drive a Toyota minivan, your chance of being ticketed with a DUI is less than 1 per 1,000 drivers.
My first reaction when you gave me that first stat was there were a lot of people not getting caught.
Which may be true. Okay. This mindset, right? Or this, I guess mindset is what I'd go back to say, I have this idea about the severity of drunk driving, and therefore I gravitate to this type of vehicle is super fascinating. It's like human behavior at its weirdest. Can you guess? Because there's other odd cars. They're not all trucks in here. There are other odd cars, I think, that have much higher average DUI rates than average. Got any ideas for me?
Well, I'm going to say this. First. It's probably there's something that is put into the psyche on both ends, maybe on the cop end as well as on the driver end here. Because I'm going to give you a scenario. You're watching a movie, right? You put on, what do you watch? Paramount Plus, probably, because you some nonsense. You put on your Paramount Plus. You put that movie on. There's the father of 3 who is in the bar, the like rustic bar. He puts down 6, 7 pints, stumbles out of the bar. What car does he get into? It is unequivocally a pickup truck. Unequivocally.
I mean, maybe it should be. Maybe that means the director of that film really has done the research here, Doogles.
But this no, I'm saying like I think it's put into the psyche of people that that's what you get into, and put into the psyche of the popo as
I
well.
never thought about this till this week. Never. I never thought about driving this type of car means I'm more likely to get profiled by an officer.
I thought you were gonna say, and that's why deep value is anyway. All right. So what other kind of cars
Give me some
pop
other
up to me?
ideas. Yeah.
I'm gonna go like an older Bronco is something that also pops up in my head.
Oh, I mean, the OJ car is not on this, but it should be. I give you.
Yeah, because
I
you know
give
what
you
I'm
a pass
talking
on
about.
that. Yeah.
You know what I'm talking about. I would also say a sports car.
No, I need like models here, Doogles.
Oh, you need models.
Yeah,
Oh my
come
goodness,
on.
models. Okay, Corvette.
Corvette did not make the list.
Okay, this list is wrong. Erroneous.
Come on.
Give me
Okay,
some.
so first of all, let's just say all pickup trucks. The other big ones are
Oh,
Ford
we already
Ranger pickup
no
truck,
we
Chevy
did pickup trucks. Pickup trucks are done. I already said
Pickup trucks are done. But the Ram F-250 or whatever is by far the highest. So people that like their Dodge Rams maybe hitting the road a little too much. All pickup trucks are there. All American pickup trucks are in the top tier.
Oh,
So to your point
okay.
about the romantic comedy or whatever, yes.
Whoa, romantic comedy. What about
Paramount Plus on me? I mean, come
okay,
on.
that's fair. That's fair.
All right. The other, and you really nailed it. There's another category. There's 4 models represented, and they are all, well, 3 of the 4 are sports cars. So you got your Audi A4, not a surprise at all.
Nope.
Audi A4,
Quattro. Yep.
Your BMW 4 Series, also not a surprise. You have maybe near and dear to your heart, Douglas. You have your Subaru WRX sedan, right?
Oh, that guy. Yeah, that guy.
Yeah, putting out a little, like I need to drive a little too fast here.
Mm-hmm. That's right.
And then the surprise edition maybe is a BMW 7 Series. Like really, like just this. I have a thing going on, and I want to show you.
I would have thought like a Jaguar. That's what I would have thought.
Again, I just don't think that might be too niche to be represented.
Could be.
You don't seem surprised by that. Nearly as surprised as I thought you.
No, because you need to get off Paramount Plus. But if you watch movies enough or shows, this is what they have people getting into.
I don't let a director of a terrible movie like shape my views of life as much as you appear to.
The Holiday is a good movie.
All right, last quiz. We talked a little bit about this last week. In 2025, the world economy will be roughly $115 trillion. These are GDP numbers.
Oof. Yep.
Okay. I just want to hear some numbers from you. How much of that is the US?
70.
30? 30?
No, I know.
You're trying to go market capitalization.
I know. I was going more market cap.
How much of that is like Mexico?
1.
Almost 2. Is Australia bigger or smaller than Mexico in terms of GDP?
Smaller.
About the same, actually bigger. So Mexico is 1.8 trillion and Australia is 1.9 trillion. Okay. Our friends in Germany, what do you think they're doing?
Germany, 2.5.
Going on 5.
5?
Shout out to Germany.
There you go. Aleman, baby.
Yep. Give me France and Great Britain. Give me some estimates there.
4 and 7.
France is 3.3. Great Britain is 3.7.
Whoa. Okay.
Yeah.
Wow. But they run the world, baby. Remember back in the 1800s?
It seems like it.
Seems like it. Oh my goodness. Love Actually is a good movie.
I bet China, off the top of your head.
That's actually closer to like 7.
19.
19. Hold on.
Trillion.
Wait, hold on. Oh, you know why? Because I mixed up a couple things in my head. Because the America is more like we're like 21, 22, something like that, right?
No, America's 30. We just talked about that. USA.
What? This is the same America? The USA is America?
You're struggling here. You're really struggling. Tell me if Russia is more or less than Mexico A reminder, Mexico is 1.8 trillion.
I mean, the fact that you're asking this makes me want to say less. I would have guessed more generally, but the fact that you're asking it makes me want to say less.
No, it's more. So Russia is, and who knows these numbers, but estimated to be 2.2 trillion. Isn't this crazy? I know the Russian economy has been decimated, but like we're out here talking about Russia like it's some big massive deal, and I know they have nuclear weapons, but come on, we're out here talking about Mexico trying to run the world. I don't know about that.
What's the United States?
30 trillion. How many times do I have to say this?
Well, we talked about America. We talked about the U.S.
Stop it.
I
Stop.
want to hear about the United States.
Two more for you. India. Give me a guess.
7. I just keep guessing 7.
4.3 trillion.
And if you add those two numbers, what do you get?
And last one for you. Japan.
7.
Come on now, dude. 4.4. I love these numbers.
So
I love
there's no,
reset.
hold on. Is there no country that has $7 trillion in GDP?
Not at all. Not
Oh
at
my
all.
gosh.
It goes US 30 trillion, China 19 trillion, maybe 20 trillion. And then the next biggest is Germany at basically 5. And then you have like the Japans and the Indias at 4.5. And then you're into the Great Britain, France land at 3. And then you're down at 2 trillion. It's like Australia, Brazil, Russia, Canada, Mexico, pretty much, and South Korea.
I have no concept of what GDP is what I've just learned.
Well, we
Like,
all might. We have listener mail where we're going to talk about that. I can't wait.
oh my goodness. Wow. Okay. You ready to dip into that?
Yes, absolutely. So, Doogles, I'll let you do the nitty gritty details. We have lots of listener mail today, and I think we might be doing pretty much a listener mail only show.
As always, with the listener mail, you can send it to us, skippydoogles@gmail.com. Let's hit that jingle.
They fight and fight and fight and fight and fight. Fight, 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 fight. The Skippy and Doogles Show.
All right. This first piece of listener mail, it reminds me of a conversation we had a hot minute ago when we were discussing what's happened to the CAPE ratio because of interest rates. If you recall, like 3 years ago, we talked about how that might adjust. So this piece of listener mail that came in, it's saying, okay, I get y'all how you talking about how the market value to the Buffett indicator, the market value to GDP ratio has progressed, is a lot higher than it has ever been before. 2x we talked about. However, maybe the underlying conditions in the market and the economy are different. That is like the premise of this. There's a lot more words that come into this.
Yep.
And there are 4 reasons that were first put out. 1, US companies are getting better at turning revenue into profit. 2, increasing percentage of manufacturing and sales happening overseas. 3, increasing percentage of US company revenue flowing through overseas corporate tax havens. 4, increasing growth rates / expected future growth rates for US companies. So the point is, if this is happening, if these underlying fundamentals are different, then maybe the ratio. And part two, there was a follow-up to the listener mail. It's saying that if you look at the chart, it seems like something may have happened in 1995 because we have not come back to 1995 levels since 1995. And a couple prostications, I don't even know if that's a word, but I'm gonna put it out there because there might be prostications. 1, NAFTA took effect on January 1st, 1994. So maybe something about global trade happened. 2, China, and it's 19/20 trillion dollars in GDP that I just learned. 3, software started to eat the world. So changing profit dynamics, growth rates, international reach, et cetera, et cetera, et cetera. So that's the premise of this is can we compare what we have now to historicals?
Deep breath over here. I love this listener mail. It provided a clear hypothesis, provided supporting materials, and also sent a follow-up email. Really quality stuff here. Now, Doogles, there's 1 of 2 options for me on this one. We can talk about it for about 45 minutes, or I can talk about it for about 30 seconds.
That's the only 2 things you could possibly do. Let's start with 45 seconds and see where we go.
Okay. This first, let's talk about the Buffett indicator and the things that happened around 1995. All this is true. That I think this hypothesis is very reasonable. A hypothesis like this always happens when someone is attempting to say it's different this time.
Or maybe ask, is it different this time?
Yeah, yeah. If you look at the Buffett indicator and say things are different starting in 1995, it's true. The average of that period of time is elevated compared to the average going back. This chart goes back to like 1970. Completely true. And there's a variety of complex factors that have led to those elevated. I'm going to call this a valuation measure, right? You know what also is true? In 2008, when this was well below the historical mean, it was a great time to buy stocks. Great time to buy US stocks.
Say more about
In
that.
two, in 2000, when it was well above the historical mean, it was not a great time to buy US stocks. And today, when it is more than double the previous high, it's also probably not a great time to buy US stocks. So if you step back, I love the question in the email so much, but I'm sorry, I can fundamentally not take the view that mean reversion will not happen here. It's like in my core.
But two things. First of all, maybe this is why deep value. ... Anyway, the second one is, what is the mean?
Oh, people ask this all the time. And the most classic place where this happens 5 times a year on financial Twitter, and with a new group of folks almost every time, is people ask us about CAPE ratio and they try and figure out what's happening. And I've been through the analysis of how the accounting standards changed in 1999 and why it's been elevated for the last 20 years. And there's really good points here. There's really good points in Josh's email here as well. But the 4 factors he lists are things.
I asked you, hold on. What is the mean?
Here's what I would say. I prefer a much longer time horizon than average. I don't care about the last 10 or even 20 years.
Okay.
That's a personal preference, though. I'm not telling anyone else that that's how they should think about it.
But then you would be saying it was a bad time to buy US stocks in 2015. It was a bad time to buy US stocks in 2017. It was a bad time to buy US stocks in 2018. Like this is the, if that's what you're going according to, then yeah.
No, this what CAPE ratio or the Buffett indicator or anything else says is not that it's like probabilistic outcomes, right? Where it's really valuable is if it's at absolute extremes. In the middle, it doesn't tell you anything. It's not a market timing tool. If it's slightly elevated or slightly depressed, I don't think it should factor into your stock buying strategy at all.
Okay. Then what's the point?
The point here is it will revert to the mean.
So how does that not?
Let me just talk about that a little bit more.
Okay. All right.
Let's go with the hypothesis. Those 4 points. U.S. companies are getting better at turning revenue into profit. That basically means software, as I read it. Like, right? And companies like Visa, who can have crazy profit margins with almost no manufacturing or cost of goods sold.
Yep.
That's true. I think that's the Magnificent Seven is a great example of that. Increasing. So with each of these points, and I won't go point by point, but what I'm going to say is that may be true. That may be part of the reason that this indicator and other indicators have been slightly elevated in the past 20 years, but I still don't expect it to last forever. The point there is, let's do a microscopic example. What's happening to Visa with all the regulatory uncertainty of them being sued 7 times in the past 3 months by different government agencies going, oh, we're looking at your profit margins, which appear to be elevated, and we don't really like that. So I expect it to change and come back to normal. Software, yeah, I hate to even go here because I think we're in fantasy land, but on Invest Like the Best, they were doing a breakdown of the latest moves in artificial intelligence and talking about how some of this looks so promising that you can go in and rip out legacy software systems, something like a Salesforce, which was thought that, Salesforce is like, once you get your hooks in the organization and you build on 15 years of this being your CRM, it was thought of as like, this is impossible to replace. That might not be the case anymore. So the elevated margins that came with those software as a service companies that are targeted at enterprise, I think that might also get disrupted soon. Basically, for each of these points, I think you can have 4 factors that are outsized and lead to elevated margins. But I think each of those factors in due time reverts to the mean. And then I think the combination of those things takes the high level metric and brings it back to the mean. So does that make any sense?
Yeah. I'd say yes, it makes sense to me. And the other thing that I would say is if you believe that these two truths exist, they're both true, what does that mean? And to me, that is what you're saying, is if you believe reversion to the mean happens and you believe US companies have gotten better at turning revenue to profits, increasing percentage of manufacturing, et cetera, then what does that mean? And I think that's part of what you're saying. If reversion to the mean is going to happen and these are true, that means that government agencies are going to get better at turning your profit into theirs. It means that manufacturing is going to come back to the US. It means that tax havens are going to be broken down. And it means that future growth is going to be lower. Like that is what that means.
The tax haven
some version of that
is this country elected a person who one of their many slogans is America First, which has this connotation of like, yeah, we're not sending that overseas. I mean, I think the tax havens, I think it's a great point. I don't expect it to last forever.
Yeah. I think that is the fascinating thing. And what ends up being, which I know we've been talking about this for a minute. And so you're tired of it. You're tired of it. But if Skippy says your definition of the mean is a longer time period, and you look at where we are and you believe that GDP is not going to completely crater, let's keep GDP constant just for the sake of this conversation, then we got a long way to go before we hit that mean.
Long way.
Here's
I think this relates to the listener mail, but tell me if I'm just completely off my rocker here. One of the write-ups I read recently, and I think it was just a tweet storm from Ryan Kirkland at Alpha Architect that I really liked, is him articulating the fact that for international stocks to outperform U.S. stocks, that could happen and happen drastically, even if international profits grow at a much slower rate than U.S. profits. Simple math there is
that's right.
PE on the S&P 500 is something like 30, and PE on international stocks is something like 15.
It's like half.
So even if international stocks, even if there's no growth in their profits, but those just maybe get closer to each other. Like US goes to 25 and international goes to 20. The actual price movement is going to be drastic. So US stocks are going to pull back to move from earnings multiple of 30 to earning multiple of 25. And international stocks would have multiple expansion in this scenario, even if their earnings stay the same. Sorry, I don't have the exact numbers in front of me, but hopefully the illustrative piece makes sense.
Yep.
It's like, it's just a easier bet to win. A lot easier what to win because
so long as you're patient. So long as you're patient.
True. Because
maybe because we don't know the time period. That's the thing. So you have to be capable of being patient.
Yeah, and this is where let's go back to your time horizon piece. I think it's really important. For me, I'm looking at a graph here with 50 years worth of data, and that's the time horizon I like. So the investment decisions I make if I buy Brazilian stocks, I'm certainly not flipping those things in the next 6 months, and I'm probably not flipping those things in the next 3 years. Probably sitting on my hands for a long time because how long did it take for this? Basically, Doogles with this Buffett indicator chart, adjust on our way. It crossed the historical mean in like maybe 2012. So for the last decade, this is to your earlier point, we've just been running up and up and up, higher and higher. And it could easily take a decade to get it back down to a place that I think is fair.
What I would love to see, and if any of our listeners are into interactive charts and that's how that's the joy that you get in life, please create this. What I would love to see is the ability to go year by year and look at the historical mean at that point and then be able to see the future. Because if you go back to 1995 and we were looking at this chart in 1995, the chart looks different. And so where do you see yourself relative to the mean at that point? And then what does the future look like? I don't know if you can do that in here, but that is what I'm curious about.
Give me 1 second. Oh, very bizarre. This is an interactive chart, but the mean is fixed. It doesn't change. Yeah.
That's the thing. And so when we look at it from this angle, we're saying, oh, but in In 1995, you're below the mean, but in 1995, you're not necessarily below the mean. The mean was different. And that's
Let's
what I'm curious about.
yeah. Let's put a bow on this, and I'm gonna surprise you. We're gonna talk about a stock that's near and dear to your heart. The thing that's so great about Dougall's investing philosophy, correct me if I'm wrong, I'm sure I'm going to stick my foot in my mouth, but it's actually important that I articulate this rather than you, is he looked back at historical data and found all these superstar performers that said that, like, this is where all the models, all the hypotheticals get done of, like, if you put $10,000 in X, then, oh my goodness, you'd be so wealthy. And the problem always was, yeah, but at the time in 1993, when you were supposed to buy whatever, Microsoft, it didn't seem like a surefire slam dunk. It was just this unknown piece of garbage. And so you built a strategy around identifying those stocks and then, probably most importantly, actually letting them run, freaking letting the thing explode, even though it's going to tell you it's price to equity of 1,000 or whatever, even though all these fundamental valuation metrics don't really make sense because of the rapid growth in earnings that has to happen over the course of time to get massive compounding on top of massive compounding. The company I want to talk about today, and the reason I want to tie it back to this is I think it's important, is Broadcom, who crushed their recent earnings. Stock went up, what, 22% in a day. And you hold, is that 40% of your portfolio or something, Douglas?
It's like 70 at this point.
70, right? And
Roughly.
I know that I've told you on the show and off the show to trim that holding, that it doesn't make any sense. I know you have some anxiety around that, but you're actually sticking to principles of saying not revision to the mean, not at all. Saying, like, when I get a high flyer, it's actually important to my long-term back test, to my fundamentals, to let that thing run when it looks like basically all the facts say this thing can't go up anymore. Like,
Yep.
But no, it keeps going up. So Broadcom's one example of that. I'll let you jump in, but that's the other approach here that I think makes sense. You can say, I don't believe CAPE ratios. I don't, or like, I believe in revision to the mean, but I also know that it can run the opposite direction for 10 or 20 or 30 years. And so, like, you can build an investment philosophy that doesn't have to have that as your core value, but it has to be more like your approach, which doesn't work for everyone. Like, just fundamentally with the mindset.
Yes, I completely agree. The psychology of it is very difficult. And this is where you and I have talked about this with both of our models, or any quantitative model is part of the beauty of having the quantitative model is that it takes your psychology out of it. Because this stock, as an example, and I don't know what the future of Broadcom is. We don't know.
Yeah.
But this stock, as an example, if it were in a model, or sorry, if it was in the portfolio that I had, that was just me buying and selling, I don't know that I'd be capable of holding it.
Oh, you would have sold this thing 10 times.
Yeah, exactly. And it's up something like 11x from when I bought it. It's like that is wild.
Wow.
And I'm probably out at 3x in my normal
and feeling
portfolio.
like you like crushed it.
Yeah, exactly. And that's the beauty of the quantitative model. But yes, the mean, what is the mean? And it's a thing that I talk about in general, is that greatness is not the mean.
You meaning the exceptional stock that outperforms 99.9% of all the other stocks, which your model is working to find and hold.
Exactly.
Yeah.
And so if one is looking to if one looks at benchmarks to figure out how they should run their organization, the only thing I'll guarantee is that your organization will not be great. It doesn't mean your organization won't be successful. It doesn't mean it won't check the boxes on what you want to achieve. I'm saying it will not be exceptional in the long term. Like, I can guarantee you that, because exceptionalism is not benchmark.
Yeah. Here we go. My favorite quote from this week: "Only dead fish go with the flow." David Ogilvy. It's great, right? It's great. And if you truly want to be different, you have to actually be different. Musk is a great example of this. Ruffles feathers all over the place, does things that, again, 99.9% of the population doesn't even imagine to be capable in a lot of ways.
Yeah, exactly.
Okay, so just to put a bow on the listener mail, I hope that helps. I love this. Thank you for sending it our way, Josh. My investing philosophy is just different. I called out Doogles, which I respect greatly for a reason there, but mine is fundamentally based on a belief that things mean revert. So I'm not blindly buying US stocks at these valuation metrics. Doesn't work for me. That also means the last 3 years haven't been a ton of fun for me. Like I'm hanging with the market, and exhibiting a lot more pain to hang with the market. But I do believe that when this flips, oh gosh,
It's
I
going to
make
flip
so
hard.
much money so quickly. It's fun.
Yeah, it will flip. I believe this as well. It will flip, and when it flips, it will be so aggressive.
Yeah,
I believe it. It's going to be wild. It's going to be so wild.
can't wait. I would talk about deep value stocks here, but I'm not allowed to. So
And that's
let's move on.
why deep value. All right, should we transition to other listener mail?
Let's do it.
We got the second piece of listener mail that is about Bitcoin. And there's a conversation between Jack Mahler, who anyway, I won't give my feelings. It's a conversation between Jack Mahler and Rick Rubin. By the way, if y'all have not read the book, The Creative Act, go read it. I think that's a very interesting piece of work by Rick Rubin.
By the way, if you're looking for investment advice, I think the best place to go is a guy that doesn't wear shoes, doesn't trim his beard, and creates music all day. Don't you think, Douglas?
Absolument.
I like Rick Rubin too. I'm not throwing shade, but it is funny that Jack Mahler makes an appearance there. Like, isn't that concept generally hard to believe?
That is true. I'm going to give you one quote. I just pulled up my notes from when I read The Creative Act. I'm going to give you a quote from that book that also applies to what we just discussed. Here's the quote. Rules guide us toward average behaviors. What we just discussed.
This is dead fish going with the flow again. Like, yeah.
Oh,
okay.
Dead fish.
And since we're transitioning to Bitcoin, let me just continue to tell this story we've been telling about the last few months of how interesting things are in that space. There's a coin called Fart Coin. I'm not familiar with it.
Excuse
I'm
me?
to pick some up.
Excuse
Fart
me?
Coin? Fart Coin?
Like a air doo-doo coin?
Yep, that's right.
Okay.
This stat is from Thursday of last week, so apologies if it's a little out of date, but at that time, Fart Coin's market cap was greater than...
Can you not say the name of the coin anymore?
What do you want to call it? What do you want to call it? This coin's market cap was greater than 38% of all American publicly traded companies.
Yeah. Can you imagine if you've started this organization? It was so difficult. You put in your blood, sweat, and tears. You've run it. You've had payroll for people, and this is more valuable.
I can't imagine. I'm in that boat, and it's crushing to my psyche. My small business and the small businesses I support are over here getting crushed by a coin that I'm not even allowed to say on the podcast, Doogles. It has no value and no utility. All right, so that's the first thing. The second thing is we broke down Michael Saylor's amazing pitch. Amazing, right? Pitch to Microsoft. Good. The votes came in, and less than 1% of shareholders voted for the strategic proposal to
only Michael Saylor voted for it.
Basically. Anyway, but that leads us into the listener mail. And I think, Douglas, the listener mail might have been a very kind response to me going like, I just don't know how you know when to buy or sell the thing. Even if you argue that it has a purpose, which I can get on that. I think I've been saying there's some sliver of a purpose for a while, but I still can't assign a value to that in any way, shape, or form, right?
That's right. And before we get to the specifics of the listener mail, I'm going to play a clip, not from the pod interview between Rick Rubin and Jack Mahler, but a clip of a individual that, just listen to the clip. Here we go.
Like, everyone goes, Bitcoin is a bubble. It's tulips. Okay, tulips was the bubble in tulips in Amsterdam in 1630. That bubble in Amsterdam, where is the center of the global flower industry today? It is in Holland. the Netherlands has been the center of the global flower industry for 400 years. That tulip bubble brought 400 years of prosperity to Amsterdam. So to call it tulips is actually a compliment, not an insult. And then you go, what is a bubble? Well, I'll tell you what a bubble is. A bubble is a bull market in which you don't have a position. It is a psychological way of justifying that you didn't invest in something to call it a bubble. So you can call it a bubble and you can dismiss it. But the potential of Bitcoin to be the default cash system of the internet and the default savings vehicle of the internet is so extraordinary, I would argue that the risk is not owning Bitcoin, the risk is not owning Bitcoin, if that makes sense. Everyone should have an allocation in their portfolio. And don't try and use the fact that I don't understand it as an excuse. Because most people don't understand how the combustion engine works and they still own a car. Most people don't understand hypertext transfer protocol and they still use the internet.
The first rule of thumb, the moment someone in a conversation says, if that makes sense, is when they realized that they don't understand what they're saying. That's a Doogles law of conversation.
Do you know how many bubbles are happened in places that aren't Holland, where the flower, the tulip in his case, actually turned out to have no value, and they just destroyed the economy for 50 years.
It's happened 0 times. I talked to this man. He told me it happened 0 times.
So Buffett says that value investors aren't really taught; they're like born. Basically, you explain the concept to someone and they get it in 5 seconds, and it makes sense to them or it doesn't. I think the flip side is probably true with your Bitcoin enthusiasts. Like, that argument does not carry it. I laugh. I laughed at the tulip point when I first heard it, but I know there's people that resonates with, and I think it just is what it is.
People like being a part of something that's bigger than themselves.
I mean, I was comparing this to religion last week.
Yeah, exactly. And that doesn't mean it's completely false, in my view. It doesn't mean it's completely false or none of these arguments are true. But when this much conviction comes behind something, it gives me a lot of pause. I'll tell you that much. Because even if I were to his point, maybe, if I were to go to his point, you can say the internet, the dot-com bubble burst in 2000, 2001. That doesn't mean the dot-coms are gone. It means that the enthusiasm at that time behind it was too heavy given the fundamentals of the thing. That's what it means. It doesn't mean the thing is over. And it doesn't mean tulips, no one ever bought a tulip again.
Yep.
And I think that's the thing that I would get behind, is saying what I would not say is, if Bitcoin is in a bubble right now, it doesn't mean that cryptocurrencies never have value ever. It just means that maybe the enthusiasm behind the fundamentals right now are too heavy.
Well, and fundamentals, you're going to make me laugh over there, Doogles. But
yeah, because your Excel chart would say cannot divide by 0.
To use his point, regardless of if Bitcoin goes up 10x or goes to 0, there will be a legacy of Bitcoin in El Salvador 20 years and potentially 100 years from now, because they chose to make it a core part of kind of their country. That's not a good or bad thing. Like, great. I understand why they made that bet too. I don't know. It still does not speak to the value point, but I know you're going to educate me with your boy Rick Rubin on that.
Oh yeah. Oh, absolutely. Okay, so back to the listener mail. Conversation between Rick Rubin, Jack Mallers. The listener mail was as follows. Tell me what you think of this guy. I've never been a Bitcoin guy, but he did lay out a story with a bunch of historical reference points that at least made me think about it differently. The idea of countries devaluing currency and its impact hit me, as did our economy, quote unquote, growing despite the cost of that growth with borrowing and debt. That was what the listener mail was. So Jack Mallers is the son of a what do you call it when it's commodities? Commodities. That's what you call it when it's commodities. A commodities trader, big person in Chicago. So he has deep roots in the financial infrastructure, I would say, of Chicago and the U.S. He is in the religion. He is like Prophet Muhammad up in hell.
Still owns a company called Strike, right?
I think that's
and
it.
it's
Which
built out the
I think
Bitcoin
I
Lightning
think we
Network.
talked about it like 3.5 years
Yeah,
ago.
I've used it. It's like kind of cool. Not bad.
Yeah. I'm going to lay out some of the key points because the way he talks about Bitcoin is truth. It's even a little bit differently because he does it calmer than this tulip guy. A few of the things that he says. Bitcoin is quote unquote hard money because it has fixed supply.
Mhm.
So going back to the devaluing currency point, countries can take this is what he says, countries can take your hard work. You work your patootie off to get money. And the country just prints more of it and devalues your hard work. Bitcoin is hard money.
Super frustrating. Do you want my questions and comments as we go, or do you want to lay out
Yeah,
the whole
no.
case?
No, let's do it as we go.
Okay. What if the U.S. government, with our fearless new leader, who's really into crypto because his son's at NYU, decides to make a U.S. digital coin with a fixed supply of 21 million, and that's written into the cryptography and it's passed by Congress, and that coin can be traded throughout the world and is backed by the most powerful military on earth. Is that good or bad for Bitcoin?
Well, Bitcoin, another point, is rules without rulers. So
Okay.
if that happens, hold up, now it looks like Bitcoin has a ruler.
The big bad U.S. government?
Yeah.
Okay.
Another point, no bias or special treatment. So what he's saying is, if you have no bias or special treatment, the mining process is, it was hard for me not to laugh. And that this might be on me when I was looking at this. But the point was, going back to the hard work, it's like everyone has an equitable chance at mining for Bitcoin. So therefore, it is a more equitable currency. Anybody can get it.
If you have a supercomputer and a strong power supply, and Google's quantum computer hasn't completely decoded the cryptography, but yeah.
Yeah. But as long as those are true, anybody. I no, that was my
I like the principle. Principle solid.
yeah. This was beautiful. It related to the last point. There's no intrinsic connection to value.
That's a positive.
Yeah. It goes back to it goes back to the point around the mining process and anybody can do it. He calls it the quote unquote proof of work. I don't know if that's a common phrase.
Yeah,
and
it is.
Because the essence of money is time and energy. And anyone can put in their time and energy and get the Bitcoin. If I walked into a venture capital firm with my deck and one of the slides said, my company has no intrinsic connection to value, and the meeting lasted longer than that slide, I would not want money from that venture capitalist.
Well, gosh, sorry. I was trying to be as serious as possible here. I'm struggling.
It's hard. It's hard.
Have you ever heard the analogy with as it relates to why the US dollar is like the reserve currency for the world, that the US is basically an insurance company with the world's strongest military attached to it? And what they mean by that is you have all these collections from tax receipts, and then you pay for roads and parts of Medicare and everything else. And you just have this capital base that you can raise money from. That's really the powerful thing. Everything else is just hogwash, right? But you have a citizenry that will continue to send you checks, and that's predictable. So that makes sense to build the world's reserve currency around.
Yep.
At least there's some tie to intrinsic value there.
Yeah, no,
the future tax
fully agree. I fully agree. I would not want no connection. Just as I'm going to skip. He talks about El Salvador. He goes into a lot of stuff.
Okay.
Then he starts to get into going back to religion, straight religious territory. Bitcoin is a gift to humanity. He says that he compares this to other great discoveries like Einstein and the theory of relativity, that they weren't created, they were found. I just don't get it. This to me it's like when people come, and again, I'm actually not saying that like Bitcoin is bad or that it doesn't end up doing anything in the future. I'm not saying that. What I'm saying here is this is similar to when people come to me and try and convince me to go to Burning Man. What I'm saying is the argument doesn't get me there. Like I just haven't found a Bitcoin argument that gets me to the other side. That doesn't mean that the other side doesn't have some positivities. But like when people come to me at Burning Man, they're always like, oh man, you can feel like your authentic self. I'm like, cool, I do that every day. They're like, oh, but you can like you barter. I'm like, why do I not barter? Like I didn't work to get here to barter. Like, oh, but you could run around nude. I do that when I want when my wife and kid is gone. Like there just isn't an argument that gets me there. And when I hear tulips and when I hear like this guy, I'm like, it still doesn't, I just still don't, it's too complicated. There should be something simpler. And I'm not there.
Would you potentially agree? We failed. We ask for the listeners to try and help us make a case that there's a quantifiable value. Our listeners were great, tried to help us out, and I think we failed at this, Doogles.
Yeah, I know. It's hard. Again, the best explanation to me still comes down to I believe that someone else will buy it for more.
Yes.
Or I believe that the financial system is going to completely self-destruct. Those make sense to me. I'm not saying that I buy into them, but like that makes sense as the argument. The gift to humanity, the whole no intrinsic value, like none of all that takes me farther away from buying in.
You know the scariest thing if I'm in Venezuela or El Salvador or Afghanistan, because I think the best I can do is I can argue that this is a step forward and it has a place for countries
Yeah.
like that.
Yeah.
To kind of hedge their risk against massive currency devaluation. And with the debt levels that the developed world runs, it's reasonable to say that hedge could be more valuable to more people in the future, right? But the thing I hate about the way this is manifested is I could be a hardworking farmer in El Salvador, and I could believe that this is the best protection I have against my government's problems, and things completely outside of my control could happen with, I'm going to say, a crazy guy named Michael Saylor in the United States who has leveraged way too much debt to buy this thing, where if the price gets to certain levels, he will be a forced seller, and you'll have this crash that's solely created pretty much by one individual's use of leverage. That fragility does not feel safer than all the challenges with the US government or all the challenges with even the Chinese government potentially. Like I don't think it's quite there yet. That's what I'm trying to say.
Listeners, continue to send us what you find that resonates with you around Bitcoin, because we do want to explore it. Genuinely, like want to explore it. Haven't found it yet.
Well, I don't know how much I want to explore. I mean, I'd like to be educated, but I think it's also important that we're not saving the world or anything. You almost have to talk about it with how much it's in the news these days, and I think a sanity check is fair. So that's all I'm trying to do.
Yeah, that's fair. That's perfectly fair.
That being said, Doogles, I think I'm personally ready to move on from Bitcoin. I'd like the future research to come as it relates to Fartcoin and its valuation, because that seems like the next big thing. I mean,
it's about to blow up.
Think about Microsoft is going to be voting on that soon. They should adopt that as a reverse.
I would love to be a fly on the wall. I would buy Microsoft stock purely to hear when someone presents that in a genuine fashion at the annual shareholders meeting.
I would argue that if I could be given what Saylor get 3 minutes, if I could be given 3 minutes for a presentation, I could get more than 0.55% vote.
Yeah, but you'd have to go the silly route.
The silly route, yeah.
Like how many people can say that they voted for Fartcoin? Don't you want to be one of them? And I'd go, yeah, I do. I just do. I haven't owned Microsoft stock in 20 years, and I probably never will again, unless this comes up for vote.
Oh, we're off the rails here. Anything else in your fishbowl?
That's all I got, man.
Excellent. Thanks for hanging out with us, and we'll see you next week.
Yeah, appreciate the listener mail. SkippyDoogles@gmail.com. Send it to us. We love talking about it. Appreciate y'all.